Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. Not only Hump Day, it is Valentine's Day. Happy Valentine's to you guys. Hope you guys have great plans for today and with your loved ones. Obviously, it's February 14th. We're going to jump right into it because it is a kind of a big day in terms of the market. The day we've been kind of waiting for a while here. As we've talked for the last 2 weeks, inflation after the wages showed inflation numbers. The market's been pretty spooked. So let's take a look here, see what we got in the CPI report. So we got the consumer price index, also the CPI, also known as the CPI number. This is kind of the headline number, as we say, because in 1 second I'll show you. But for the month of January, so in December, the CPI went up 0.2%. Forecast was supposed to go up 0.4%. It exceeded that at 0.5%. Now, year over year, even though that jumped up quite a big number, year over year only remained the same. It remained at 2.1%. Now, when you strip out the food and energy, we have a lot less volatility because we can't control food and energy prices because it's very volatile. So this is why they come out with what they call the core, which is a CPI, and it's a little bit more reasonable in terms of this is kind of what the Fed will look at more so, but their favorite gauge is the PCE, so it's not the CPI. The PCE, which is the personal consumption expenditure, is their favorite gauge. But they do obviously look at this because this is another gauge to show inflation in a pass on to the consumer. And that's kind of really what they look at, not so much like on wholesale, stuff like that. So from December to January, it went up 0.2%. Forecast was supposed to continue at that same rate at 0.2%, but instead it went up a little bit hotter at 0.3%. Again, this one also remained the same at 1.8% year over year. So so when you strip out the food and energy, the core remained at 1.8%. So we'll show reactions here in a bit on the markets. Now, retail sales for the month of January, we had basically in December zero, nothing in December. January was supposed to go up 0.2% and actually dropped 0.3%. So instead, it had the opposite effect here. Now, when you strip out the big ticket items like autos, we have a different number here, which we show in December going up 0.1%. Forecast was to go 0.4% and basically unchanged in the month of January. So obviously the biggest disappointment was in the auto industry here. Less people buying cars in the month of January here. So last but not least, we show business inventories. We had a 0.4% increase in business inventories for the month of November. Forecast for December was 0.3, and it went up 0.4% again. So a very similar pattern here. Went up 0.4%. So overall, it could be a little spooky. The consumer price index, obviously on the surface for month over month, is a big gain. We'll have to kind of see if that's going to be a continued trend. But when you look at year over year, obviously it remained the same. There's no big change in there. But again, this is what's kind of feeding into the concerns of investors. Keep that in mind. With wages, it could spark up, more inflation talk, whereas the Fed may have to heat up in terms of their rate hikes. Now, the difference between last year and this year is we've had a few new appointees, and most of those new appointees are all hawkish, which tend to be more in favor of rate hikes. So that's something that the investors have on their minds in 2018 versus last year. Retail sales, again, kind of disappointing that retail sales dropped again in the month of January here. So we'll have to kind of see if that's also a trend, if that comes down, or if people can go out and spend more money, shopping as well. All right, but the good news, obviously, here would be business inventories. That businesses were stocking up into the new year, which could translate into more jobs as well. So without further ado, let's jump into the headline news here. The stock market is actually currently up. It did start off low, down this morning, primarily because the inflation talk, it concerned them. But then they kind of shrugged it off. I think they looked at the year-over-year number and kind of shook it off. So now the stock market as a whole is kind of gone into positive territory. Whether if it ends that way, it's hard to say because the market's been so volatile of late that they've been going, seesaw back and forth, negative territory, negative, positive, and stuff that you just don't know exactly where they're going to end up. So with that mind, let's go ahead and see how the bond market's reacting. The bond market is reacting negatively. As you can see, we did start off in more positive territory here, but since then we've dropped quite a bit. We're down about 30 basis points right now. We're testing this floor of support right here. We're down at 30 basis points, which translates to worse pricing today. Now, the reason why bonds going to react more negatively is primarily because inflation is its biggest enemy, its arch enemy in terms of overall headlines. So the reason being is that bonds, when you have a bond, when they institute a new bond, it's over a 30-year period. It's a long period. So when you have inflation, and it's at a fixed rate, so when you have inflation rising, it ruins or it basically erodes the value of that bond. So the value isn't worth as much because obviously you could have been making higher yields or higher rate of return on equities with inflation versus the bond. So it kind of erodes the value of it. So bond market's not reacting too kindly about this. So yields are up a little bit. It's up about 4 basis points. We're up about 2.88% right now on the 10-year. And we'll see if we'll test that first line of resistance like it did a few days ago on Monday, basically. All right, so that pretty much wraps things up. Rates have went up a little bit as a result due to inflation. Hope you guys enjoy hope you guys have a wonderful Valentine's Day. But if you guys want to get more data throughout the day, just come over to Twitter. You can find me at Mike Bjork on Twitter, and I will be posting throughout the day over there as well. You guys have a great rest of your day, and thanks again for watching. We'll look forward to see you guys tomorrow. Bye-bye.